should see a disclaimer. Good. All right. Good afternoon, everyone. It's Sunday, December 22nd. This is Lee McMahon. You are in the weekend webinar here, sponsored by GlobalFXClub.com. Thank you very much for joining me. Please take a moment to read over the risk disclaimer, which should now be on your screen. If you are watching the recording, please pause the recording and carefully look over the risk disclaimer. Then we will move to the charts. As always, any questions you may have, please feel free to put them in the chat box. I'll be happy to answer them. As was just pointed out by Adam, Japan is closed today in observance of the Emperor's birthday, so happy birthday there. So a slower Sunday than usual. Considering the holiday week, this could be a very, very slow Sunday night. But, I mean, not necessarily, just because low liquidity does not always equal low volatility, though the two tend to run hand in hand. All right, so let's take a look at some of the majors and the crosses and the indices and go from there. We're going to start with dollar CAD because that's what I had open. Dollar CAD is also one of the ones with the larger gap. And it's also a very attractive long opportunity here at market open. We sold off hard on dollar CAD on Friday. The Canadian dollar rallied across the board. I don't exactly know why. There may have been a piece of news or rhetoric that I missed. I think it may have just been someone wanted the Canadian dollar. But on dollar CAD, we are now testing multiple support levels here. First, we are testing the 618% fib at 106.26, marking this, this rally here up to the highs above 107.36. And we're also retesting this trend line here. All right, so with the 100-period EMA on the 4-hour chart lurking right around here, this is a fairly attractive long opportunity. It would have been attractive here on the close on Friday. You would have got in right basically at that fib level, but we're about 12 pips up from there now, so really pretty small stop. You could have about a 25 pip stop, and I'd feel pretty happy about it, and you'd be looking for about 65, 70 pips, I think, before things start to get interesting again. So dollar CAD, very attractive setup here to start the week. We'll run through the rest of the CAD crosses in a little bit. Let's talk euro dollar. Slightly lower on the day. I am bearish euro dollar. All right, since we broke this 50-period EMA here in red, we came up and retested it. I think that could be a pop to fade, and we'll see. The major support level is, you can see highlighted here with this oval. This 200-period EMA here, that comes in at 136.31, so about 37 pips below market. And then we have this ascending trend line here. Bears really need to push euro dollar below 136 to get any acceleration to the downside. As long as it remains sitting above 136, all right, there's going to be buyers lining up. So it needs to break that level really before we can really start to get excited about a potential trend reversal here on euro dollar. So watch this trend line. You can try to buy it off that trend line support if we get down there. All right, your major resistance levels are up here at about 137.40, and then this 138 to 138.30 level is the major resistance. That is the bearish line in the sand to the upside. As long as we're below 138, bulls aren't going to be able to run rampant. So it's really this 136 to 138 range that we're going to see some fighting in here, I suspect, going into the end of the year. Pound dollar. Okay, pound dollar opening apparently slightly higher today. Capped by this descending trend line pretty well. And now it's been the 100-period EMA supporting it. That's at about 163.18 or so. Get below there. The major support area on pound, I'm not interested in pound dollar really in either direction unless we get down to about 162.50. In which case, I would like to buy quite a bit of it. I think this 162.50 area, so that's about 80 pips below market. It's the 200-period EMA. It's this trend line, bottom of the wedge here, and it's also a retest of this supporting trend line. You can see this candle right here. The last time we got down there, we rocketed up towards 165 before falling back down. So I would like to think that that 162.50 to 162 area would provide a pretty decent buying opportunity should we get down there sometime this week. So that'll be the level I'm watching on pound dollar. Other than that, I don't have a particularly great interest in trading the pair. Aussie dollar. Aussie dollar looks like it may be trying to form an inverse head and shoulders here. It did form an inverse head and shoulders back here, okay? And then you can see it got sold off. So just because they're putting in the formation doesn't necessarily mean anything. But I am neutral Aussie dollar, I suppose. I'm not really looking to sell it or particularly interested in buying it. I'm really just watching it for this test here at about 90.50. This major descending trend line corresponds pretty nicely with the 200 period EMA. I think that area will be a very nice area to either sell against or wait and see if we break. And if we do break out of this descending trend line, it could be a very attractive medium-term buying opportunity. We click out to the weekly chart. Okay, this is last week's weekly candle. That's a pretty aggressive hammer. We do actually have some RSI divergence on the weekly chart as well, right at this major resistance support area. Sorry, here, dating back to August of this year. All right, so this is a pretty important area for Aussie dollar. And you can see there are some factors that suggest we may be seeing this pair gearing up for what I would consider to be a corrective rally to the upside before continuing lower. But we'll see. The RBA easing program has likely reached its conclusion. So maybe we can see the Aussie catch a bid. The fact that the RBA doesn't want the Aussie any higher will weigh on the pair a little bit, but the RBA hasn't been happy for as long as I can remember, so I don't think it's going to really hold people back if we do start to see some positive developments in China and maybe even in Australia specifically. The major problem I have with significant longer-term Aussie dollar longs is that this decline here, okay, starting really, I mean, let's even forget it. Let's start back here. Starting in April of this year, this significant Aussie dollar decline came while U.S. and global equities were rallying. So we have significant divergence between the two, and I am a little bit worried about what's going to happen to the Aussie if we do eventually see an equities correction. So mostly to take from that, we're at a major support area on weekly chart. There is a pretty decent setup for longs here. The stop below the low, so about an 88 stop, so about 120 pips. Your first major resistance is 90.64, which is about 140 pips, and then from there we'll have to see. Kiwi is a little bit more bearish, a little bit more clear. Okay, we broke out of this triangle here on Kiwi. We're now being held down by all the moving averages here. Obviously, we need to clear these lows, but I am looking for Kiwi to slowly start to roll over here. Maybe move down towards about 80, at least down towards these previous lows here at 80, and then maybe 80 or 79 after that. So keep an eye on Kiwi dollar for potential downside. Aussie Kiwi, okay, a little bit of a breakout, trying to correct higher. Like Aussie dollar, there is a significant trend line that we need to get above. It's about 1.1, all right, 1.1 on Aussie Kiwi. Need to get above there again before I'll get interested in any sort of longer term Aussie Kiwi longs. Aussie CAD, same thing. There's a theme. Needs to clear this. This is actually the best. This is the best Aussie setup for me. Is Aussie CAD. All right, your first opportunity, rally up towards about 95.85 to sell. All right, looking for these 91.69 lows. If we manage to get above there, you can try selling at 96.35, this major descending trend line in the 200 period EMA. And if we get above there, it's a great buying opportunity for really a move up towards at least parity. Let's see if I'm willing to go higher than that. Okay, we got below that 618, so I'm not really super keen on looking for new highs on this one. But if we do manage to clear this descending trend line, we could see some Aussie strength up towards about 99 or parity. So those are that's a pretty decent pair to keep your eye on here this week. It might be quiet. It's a cross pair. We don't have a lot of volatility, but even in the beginning, into the beginning of 2014, I think Aussie CAD is a fun one to keep your eye on. Euro CAD, okay, testing support right now. I was asked if I wanted to sell up here. And I didn't. In retrospect, it would have been a great sell. The reason I passed is we've been running up along the top of this channel, and the pullbacks have been increasingly shallow. All right, we got a little bit of a deeper one this time, but we're at support now here on EuroCAD. That 100 period EMA is green. All right, and then we have All right, this trend line area in here as well. So keep your eye on EuroCAD. I'm not keen on trading it because the crosses don't line up. Okay, so I'm bullish dollar CAD and I'm bearish euro dollar. So EuroCAD to me is kind of a crapshoot. So I'm going to continue to stay away from it. Pound CAD. On the other hand, I do like Pound CAD to the upside this week, going into 2014. I think. Okay, we're testing that 618% fib here. We did have a nice opportunity to hold that we failed on Friday. All right, so we couldn't hold above this trend line on Friday. We broke back below it, so now we're on fib and moving average support here. I think my strategy will be on Pound CAD to wait till we get back above this trend line. So back above 174. All right, so give it about 80 pips to see if it's going to do what it's going to do. If it gets back above 174, I'll probably look to buy it for a continued move higher. It is worth noting and remembering that if we go to the daily chart, all right, we were significantly oversold here on Pound CAD. Delete these. All right, we just fell short of touching 80 on the RSI, and we were showing some pretty decent divergence. So this move lower, not overly surprising. Now it's just a question of how long it's going to last for. If we do see a continued move lower, 172 is going to be the next support area. All right, and then we get some trend lines coming in below there that you'll have to watch. Also worth noting, weekly charts, okay. This has been a pretty aggressive run higher. You can see where we are here on the RSI on the weekly chart. We haven't been, overbought on this pair going back as far as my chart goes right now, which is 2011. We are now. I've been kind of dipping in and out of this area, so you never, we could start to see the pound start to move a little bit lower, but in general, the pound to me looks pretty good across the board. So just pick your spots very carefully and remember that the move may be a little bit stretched. All right, let's do end of the CADs. CAD yen, okay. Got back above. We're now sort of running still within this channel. There's plenty of opportunities to buy CAD yen. We're above these previous highs here. All right, we held down. We held below 98, all right? We got hit down pretty hard, actually, on Thursday night to Friday. So 98 remains resistance, as well as this is just general top side of this channel, all right? A break above 98 could really start to accelerate some moves to the upside. So keep your eye on CAD yen. If Japan is closed today, so yen pairs may be a little bit slow, but there are some opportunities there. Dollar yen sold off again on Friday. First support is 103.76, followed by wherever this particular trend line will come in. Right now it's about 103.40 on dollar yen. One of the reasons I remain bullish yen pairs for the time being is the Nikkei does look good. It does look poised to, well, it did actually hit new highs. All right, we broke that 16K figure. I would not be surprised to see this continue to march higher. All right. You can see on the weekly chart, let's actually just delete all these drawings. I can always just put them back. Okay, this is a pretty bullish candle here last week on the Nikkei. That's not one you really want to toy with. So we could really start to see the Nikkei continue. Well, not really start. We could continue to see the Nikkei rally. And if the Nikkei keeps pushing higher, it's going to drag yen pairs with it, kicking and screaming. Aussie yen is actually kind of a fun setup right now. I don't have a trade on it right now. I'm not really looking for one. But if we do start to see the Aussie dollar gain some traction here, something it has not been able to do for quite some time, but if we do eventually see it, this topside trend line here, just shy of 94, is actually a pretty nice opportunity to buy on a break. All right, here on Aussie yen. Because of what I just said about the yen pairs and the Nikkei, I think that would be a nice combo trade. Get some yen weakness and some Aussie strength. If we start to see the Nikkei, if we start to see the Aussie gain some traction, which is by no means certain. Euro yen. Euro yen, technically very clear. Okay, trading in this up channel for quite some time. Now testing a little bit below it here on the gap. I wouldn't read anything into that until we see really all of tomorrow. Let some actual people come in. You also have to fix how I draw the trend line probably, but okay, we're running here within this channel. So sort of just keep your eye on Euro Yen right now. I'm not a buyer of Euro Yen by any means. Pound Yen I like to the upside. Okay, testing the first major support level. The first support level. The major support level really comes in at about 169.30. All right, retest of this triangle here, and I like Pound Yen to the upside very much. Euro Pound, I like to the downside. Continue to the downside. This 38.2% fib and all these moving averages here on the 4-hour chart held up pretty well. I would expect it to chop around a little bit, but I'm still looking for an 82.50 print or so. All right, these previous lows down here. So we may see it kind of chop around and roll around and just generally be obnoxious, but I am looking for the next leg lower sooner rather than later. And then at 82.50, we'll have to see how things look from there. We go to the dollar Swiss franc. This is actually another fairly clear setup that I will be watching this week. I don't trade the Swissies very often. As most of you probably, if you've been around before, know, I tend to forget to cover them because they're not my favorite. But we do have, all right, depending on how you draw this trend line, there's a couple different ways, depending on if you care about catching wicks or not. But this is one way. All right, so we get this wick. We kind of cut through a little bit here, but in general, no 4-hour closes above. And then we pick up this reversal candle here and the 200-period EMA as well. So really, I would call it 90. A move above 90 should open up a little bit of upside here for dollar Swiss. All right, so I'll be looking for something constructive along those lines to get long dollar Swiss, which means that there are some other Swiss opportunities out there, including Aussie Swiss. Okay, not a pair that's been well bid lately, but we did break out of this descending channel. We are starting to march higher. There is, I think, some upside potential here on Aussie Swiss. Aussie Swiss and Euro Aussie tend to be inverses of each other. You can see that we do have some downside potential now on Euro Aussie as well. Another pair that has been beaten up quite enthusiastically, but we did manage to breach this trend line and 50-period EMA on Friday. Let me draw the trend line a little bit more precise. We may not have actually breached the trend line. All right, so we didn't quite manage to breach the trend line. We're sitting right on the trend line here as we go in today. We did manage to get below this 50-period EMA. So look for about 153 to give way. That may actually open up a pretty decent amount of downside, down to about maybe 151, so 200 pips or so on Euro Aussie. I want to click out to the weekly chart of Euro Aussie and actually just point this out. That is the candle, the weekly candle of Euro Aussie on last week. That is not a super encouraging sign. All right, I think that would be technically called a gravestone doji. My candlestick names are not perfect, but generally speaking, that is not a positive candle if you want to be long a particular pair. So that is worth noting here on Euro Aussie. I also suspect there's a 2618 that we couldn't close above. All right, that's probably going to be about it. And a 50% extension. So there are some decent targets up here that we may have hit, and with this sort of candle, it's worth considering to the downside, especially this week. All right, you can kind of just set it and forget it. We're about 153.17, so you need a pretty sizable stop to put it above the highs, but your targets would also be pretty sizable as well. Significant RSI divergence, weekly reversal candle. Euro Aussie, worth a look to the downside. Let's take a look then at Pound Aussie. Okay, continue to like Pound Aussie to the downside as well. 182, first major support. And then from there, if it gets below there, things get a little bit more interesting. Again, not a super positive weekly candle. Okay, not quite as aggressively bearish as Euro Aussies, but still not anything that you want to get super excited about if you're long. So that is Pound Aussie. Both those crosses look like they could drift lower, but again, you're betting against this. You're betting against a solid trend, so be a little bit cautious. So we'll sort of just jump around back to the Swissies here. CAD Swiss trying to break out. First major resistance is 85.15. If they don't have a particularly great setup on CAD Swiss, that's going to trigger anytime soon. So really just not anything I'll be keeping my eye on. E-minis broke to new highs on Friday, so there's that. The bull march continues. Ditto the Nikkei. I'm sorry, we already looked at the Nikkei, but ditto the Nikkei, but then ditto the NASDAQ, which this is. That also marching higher. So equities continue to look bid. That's not what I want. Bonds, all right, the yields picked up a little bit on Friday. Nothing that exciting. That's the 10-year. The 30-year, a little bit more aggressive on the pickup. All right, so that's we see the 10 and 30-year spread increasing a little bit. Gold. All right, I've been bearish gold for a while. Now we really hit those previous lows, and we'll have to see what happens. All right, so that 1179 figure is support. 1220, 1230 are resistance. Above 1250 necessary to maybe start to flip things here on gold. As long as we're below 1250, which is this trend line, this 200 period EMA. As long as we're below there, it's going to be hard for gold bulls to get much accomplished. Crude broke out looking for about just about 100. Really, I would think for this range breakout. All right, so 170, basically $100.70. Nice upside target on crude with a stop just below this 98.40 level. So about 2-to-1 risk reward for a long crude setup here. All right. Are there any major pairs that I missed? This is dollar Swedish krona. Okay, trying to break out 6.6 remains the level to keep your eye on. Norwegian krone. Okay, 6.2 is a level to keep your eye on. This is the peso. I guess this is how we draw it. Okay, there's your downside, and then your upside should be a little bit more clear. Yeah. All right, so that's kind of the peso. All right, so support 12.9, resistance 13.2. Those are the levels to play on the peso. I would not be looking to trade the peso this week, okay? Pairs you don't want to trade in low liquidity. The peso, the Swedish krona, the Norwegian krone, which is unfortunate because there are some attractive setups there, but they're not high liquidity pairs to begin with, so on a holiday week I'd probably stay away. But they're worth keeping an eye on. Also, pairs I wouldn't want to trade: Turkish lira, which had a very nice breakout. I think I was talking long seat back in this area. Worked out actually much better than I hung on to them for. But this is another pair that I wouldn't want to trade of late, and it's also starting to show some significant divergence. So we may be in for some sort of correction here on USD TRY. If we do see a correction here through this holiday week, if we get down to 2.06 to start the new year, that may be a very attractive long. All right, requests, major pairs that I missed, minor pairs that you want me to cover. So I don't like pound Swiss here at all. I don't really know what to make of it. It's pulling back here very nicely at a 6.8% fib. So I mean, that would have been a great entry if you managed to get in about 147 for shorts down back towards this level down here. On the flip side of it, there are support levels here at about 14546 and then 14506. With the way that the crosses look, so with the way that dollar Swiss looks and pound dollar looks, I remain, along with how euro pound looks, I remain bullish pound Swiss. It's very similar to the inverse of euro pound, so we may see it sort of chop around a little bit and then continue to push higher. But right now I don't see a particularly great entry on it. I would rather trade elsewhere. Copper and oil. All right, so I did oil, but I'll do it again real quick, and then I'll get copper. All right, so this is crude. I'm looking for, to the beginning of the week, this range break to play out to about 101.70. Other than that, I don't know. I still think crude has further upside after that. May see it sort of chop around a bit. We broke this trend line. We broke this range to the upside, so we finally got the moving averages underneath us. So I do think crude is headed higher. If it gets down below 96, all right, that invalidates, but as long as we're staying above there, I think crude is good to the upside. As far as copper goes, copper is at some pretty strong resistance here, right? The resistance range is about 3325 to 335. There's a lot going on there in terms of resistance. So while it remains neutral to bullish, it's up against resistance, and it may have a hard time breaking above here. The way it looks right now, though, all right, it's handling this resistance pretty well. We don't see any sizable rejection candles. You see this candle down here. All right, we dipped down to 327 and it got bought up pretty quick. So it may be prepping to eventually move above these major levels. But it is trading just below resistance right now. So if you're going to be long, sort of be aware. And if you're going to be short, you have a decent area to put your stops. But right now it does look like the bulls remain in control. If we do manage to see a move here below these lows, about 327, that would start to shift things, I think. But until that point, bulls seem to be in pretty decent shape on copper and crude, actually. Yep. Any other requests? Any other requests or anything, questions, concerns, whatevers? Oh, I didn't do, one pair I didn't do, that I'll do real quick, is Euro Kiwi. Okay, Kiwi is actually pretty attractive here. Not to trade in either direction, but 166 and 167.25 or so are the levels to watch for a nice breakout. Especially this downside level has been really, really consistent. So if we do push below 166, we could start to see it move a little bit lower. So Euro Kiwi worth an eye as well. Pound Kiwi's not right now. If we break down further, it might be worth a buy, but right now I'm not touching it. All right, if there are no questions, I'm going to wrap it up and go eat dinner and get ready for the week. All right, thank you very much, everyone, for joining me. I very much appreciate it. I will post the recording as soon as it's done, and I will post that on Twitter so you can rewatch it to your heart's desire. Good luck trading this week. Have a wonderful holiday season, and I will talk to you soon.